welcome to our today's elevation of advanced public finance and taxation. We are going to do question 4 of November 2015. We will read through the question, and the question reads as follows. Mujengo Limited is in real estate business. During the year ended at 1st December 2014, the company acquired 10 houses, each at shillings 4 million, before incurring the following expenses: 10% interest on mortgage loan of shillings 10 million, conveyance fees for each house shillings 40,000, estate agent valuation fees per house shillings 28,000, repairs undertaken for 2 houses shillings 28,000, cost of repainting the houses shillings 84,000. The impairment loss of the houses was estimated at shillings 150,000. Legal expenses amounting to shillings 36,000 were incurred in defending a title for a house with defective ownership documents. Mujengo Limited sold each house at shillings 5.8 million. The cost for advertising the house was shillings 160,000. Estate agent's commission shillings 180,000. Insurance shillings 72,000. Valuation fees shillings 150,000, and legal fees of shillings 148,000. Required, determine the following: 1. Transfer value. 2. The adjusted cost. 3. The capital gains tax. And 4. The due date for filing a capital gains tax. So those are the requirements of this question. And we'll start by looking at the first one, which is the transfer value. We'll first of all understand what is the transfer value. The transfer value is the value of the consideration received, or in case of a sale, the disposal considerations received, less the incidental costs of transfer. We subtract the incidental cost of transfer. Now, what are these incidental costs of transfer? Now, when the property is being transferred, there are some costs that the owner of the property incurs. They may include things like advertisement, agent commission, insurance, valuation fees, insurance, etc. So those would form the incidental costs of transfer. So again, you do go back to transfer value is the value of the consideration received less the incidental costs of the transfer. Now, specifically going to this question, we see that Mujengo Limited sold each house at 5.8. The houses are 10. So 5.8 multiplied by 10 would give us the transfer value, which would be 58 million. It is from this consideration of 58 million that we would deduct the incidental costs of transfer. In this case, we are told Mujengo Limited sold each house at 5.8, and this cost, the cost of advertising the house, that is when selling, looking for a buyer, was 160,000. So that would be deducted from the disposal consideration. Also, the estate agent's commission of 180,000 is an incidental cost which would be deducted from there. We also have the insurance, 72,000, which is also incidental to the transfer. The valuation fees of 150 and the legal fees of 148,000. So all those amounts added together would be subtracted from the value of the consideration received. Then, the second part of the question, we are told to get the adjusted cost. We are told to get the adjusted cost. Now, the adjusted cost, in this case, is obtained by getting the difference between the cost, the price at which the property was acquired, or the consideration at the time of acquiring the property. Now, when acquiring the property, also there are some other costs that are incurred. Now, this cost will be added to the consideration at the time of acquiring the property. And in this particular case, we are told that Mujengo Limited acquired the 10 houses each at 4 million before incurring the following expenses. Now, these additional expenses that are incurred are the ones we are now calling the incidental costs of the acquisition or at the time of acquiring the property. In this case, we have the 10% interest on mortgage loan. So we will take 10% of the 10 million. That will give us 1 million. That is an incidental cost during acquisition. We have the conveyance fees for each house, 40,000. The houses are 10. We multiply that by 10. We get 400,000. That is an incidental cost during acquisition. We have the estate agent's valuation fees per house, 28,000. We multiply by 10. We'll get 280,000. We have the repairs undertaken for the 2 houses, 44,000. That is, we shall add that the way it is. Cost of repainting the houses, 84,000. That we shall add. We have the impairment loss of the houses, which was estimated at 150,000. Now, this impairment loss is just an estimate. It is not a real cost. No payment has been done to get this 150. So this one we shall ignore. We shall not add it. Then we have the legal expenses amounting to 36,000. This was also incurred in defending a title for a house with defective ownership documents. So this one is also an incidental cost. So to get our adjusted cost, therefore, we get the consideration paid on acquisition, and we add all the incidental costs that are listed there. Then number 3, we are going to compute the capital gains tax. Now, what is this capital gains tax? Now, the capital gains tax will be the difference between the transfer value, which we shall determine in number 1, and the adjusted cost, which we shall determine in number 2. So the difference between the two will give us the capital gains. Then, on that capital gains, we shall apply the appropriate percentage to that amount, which in this case is 5%, to get the capital gains tax. So that is how we'll get the part number 3 for the capital gains tax. Now, number 4, we're told the due date for filing the capital gains tax. Now, we understand that the capital gains tax is a tax on transaction. It's a transactional tax. And in this case, the transactional tax will be paid after the transaction has taken place. In this case, the transaction is the transfer of the property. The taxpayer should not keep this money for too long, and therefore is expected to file the capital gains tax by the 20th of the following month after the transfer. So that will be the due date for filing of the capital gains tax. Now, a few things to know about the transfer of property. So what is this meaning of the detailed meaning of the transfer of the property? Now, the transfer of the property can include the disposal of the property, exchange. You can do it by the way of giving it away as a gift and all that. It can also be a transfer due to getting compensation from an insurance company. So that one can also be considered as transfer of property. That is on the occasion of a loss, destruction, or the damage. And then the owner of the property is compensated by an insurance company. That one will also constitute a transfer of property. Then also on the surrender of the title or the ownership of the property or the cancellation of the rights to the property, then that one can also be considered as the transfer of property. Also the forfeiture. If you forfeit your property, that can also constitute a transfer of property. So the transfer of property therefore needs to be understood on a broader perspective to include all those things that I've mentioned, the disposal, the compensation due to destruction, damage, and all that, the forfeiture, the surrender of the title to the property. Then, the other thing that we may need to understand in this case is the meaning of the word property. Generally, what does the property mean? Now, the word property generally includes land, it includes buildings, and it includes the marketable securities. Basically, the shares, the stocks, and the bonds. So basically, again, that is what will constitute the property. So that when we are talking about the transfer of property, then we are talking about the transfer of any of these documents. Then, the other thing which is also important to do in this case is who is liable to pay the capital gains tax. Generally, the capital gains tax is payable by individuals who transfer property and also limited companies who transfer the property. So it's the individuals and also limited companies are liable to the transfer of property which is situated in Kenya. So the property basically again is the one which is situated in Kenya. We are not talking about the transfer of property which is situated outside Kenya. Talking basically about the ones situated in Kenya. Now, what happens if you make a loss? Here we are talking about capital gains. Suppose you make a loss. What happens? If you make a capital loss, that is, the transfer value is less than the adjusted cost. In this case, what you'll get is a loss. So what happens if you make a loss? In this case, the loss will be carried forward, and it will wait in future. If you make a capital gain in future, then it will be offset from that. So the loss will be carried forward to be offset against a future capital gain. But if you transfer right away, you make a capital gain, that is changeable to the income tax under the appropriate rate, which is present, ruling at present. So we will go straight into the computation of part 1 of the question, which is the transfer value in this question. So we'll start with number 1, transfer, the transfer value. So the transfer value, we have already explained. We have said this is equals the consideration of the transfer of the property. So value of consideration of the property minus the incidental costs of the transfer less incidental cost of transfer. So in this particular case, we'll start by identifying the value of the consideration which is paid. So Mujengo Limited, what were they given? So the value of the consideration we are talking about is to Mujengo Limited. So value, transfer value, in this case, 5.8 million per house, and the houses are 10. So 5.8 million multiplied by 10 houses. So that gives us 58 million for the 10 houses. Then, from there, we shall now deduct the incidental costs of the transfer. So less incidental cost of transfer. So we need to remove these incidental costs of transfer. So what are we told? We are told the cost of advertising the house was 160. So we remove that. So advertisement. So we remove advertisement, which is 160,000. What else are we told? We are told there is estate agent's commission. So agent's commission. So agent's commission was incurred, and this is 180,000. Insurance of 72. Insurance of 72,000 was also incurred, and then we have valuation fees 150. Valuation fees of 150,000. And then we have legal fees of 148. Legal fees 148,000. So that forms the total amount of the incidental cost of transfer, and we will take the total of those amounts so that we can know how much was the incidental cost of the transfer.